Coming up on Over a Barrel, OPEC's delayed meeting. What happened and how is that going to impact your wallet? We're going to be covering it from top to bottom on Over a Barrel, which starts right now. Welcome to the program on Over a Barrel. I'm Matt McLean. He is Mr. Patrick DeHaan. Hasn't been knighted yet by the King of England, so we can't call him Sir Patrick quite yet, but close, right? How you doing, Patrick?
I'm great, Matt. It's good to be back with you. Another one. While we were all enjoying a little bit of downtime, OPEC was, taking a little bit of center stage here. As this is, by the way, their biggest meeting of the year. They had delayed it. But a lot of big decisions come out of this meeting. So kind of looking forward to covering all the angles here on this episode.
So let's get right into it. Let's talk about OPEC. Obviously, almost everyone has heard of the acronym itself. And also some have heard of something called OPEC Plus.
Yeah.
We have all these streaming companies that have a big plus at the end of their name now, but something tells me it doesn't quite mean the same exact thing. So talk to us a little bit about that, OPEC, what it means, as well as that plus category and why that's actually kind of important for our conversation today.
Yeah, Matt, OPEC Plus is simply the traditional OPEC members with the addition of Russia. And so, they've long basically been determiners of how much oil they're going to produce, and that obviously has a major influence on oil prices globally. So, that's kind of, we could go through here the OPEC members. Essentially, a lot of members in the Middle East, Matt, some in areas like South America. But essentially, they make up about a third of the world's oil production. And so their annual meeting and what policy comes out of that can have a major impact on oil prices. Let's set the stage for today's agreement. What we've seen in the last couple of years, Matt, oil prices had fallen significantly in 2023 after peaking in 2022 at the height of Russia's invasion of Ukraine, at the height of an overcharged and very sizzling U.S. economy. That brought OPEC to this 2023 meeting. Oil prices had fallen below $70 a barrel, and OPEC wanted to take action to drive oil prices back up. So back in July of 2023, OPEC decided to issue a voluntary production cut across its membership. And they've basically been extending exactly that 2023 production cut through December, now through January, and now through the next couple of months, I believe, till April. And it was not a surprise, Matt, at all that they've continued. They've been kicking the can down the road, extending this agreement basically every month. And so, what we're seeing now is that they're going to start increasing production a little bit more down the road. And of course, there's a lot of interesting tentacles here because, as you teased, we do have a new administration coming into power in the United States. Obviously, President-elect Trump and his cabinet. And there could, be some interesting developments here. Obviously, Trump's mantra has been to drill, baby, drill. Oh, and by the way, the U.S. oil production, even under the Biden administration, has again reached record levels. The EIA's weekly estimates put U.S. oil production at 13.51 million barrels a day. So that's record setting. I do expect it'll probably continue to slowly go up. But that is the context for why OPEC has been cutting production, and they've now extended those cuts. It's basically they're trying to put upward pressure on the market by leveraging the balance of supply and demand.
Now, here's the question: is it going to work? Is there a lot of possible hyperbole? Is the best way of putting it, because they said the end of 2026. So basically, 2 years from now. Is that kind of a, hey, we're going to say this out loud, announce it to the public, and try to manipulate the price point because we are verbally saying we're digging our heels in, we're not budging, we're going to keep it this way for the next 24 months, deal with it. Is that something that they are known for doing in the past?
Well, OPEC has been a little bit uncertain sometimes. It really depends on their interest. But if you highlight, Matt, if you can load this chart up completely, and if you're following us along on YouTube, you'll see a nice chart of what we'll be talking about. If you're listening along with us on Spotify and on Apple Podcasts or another podcast platform, we'll try to explain it. But Matt, you'll see here in this big chart that right around June of 2023, oil was, as I highlighted here with my mouse, under $70 a barrel. And again, that came after oil prices peaked at about $130 a barrel back in 2022. So OPEC was really worried back in 2023, the summer of 2023, when oil prices hit their lowest level since the pandemic. And you can see, Matt, what happened after OPEC decided to cut production. Right here on the chart, oil prices in June of 2023 bottomed out just under $70 at $69. And after OPEC made that production cut, Matt, look at July, up to 75, up to 80, a little bit of a drop in August of 2023 to about $78, but then it kept going up. September, October, we got back up to $92 a barrel. So initially the production cut had the consequence, but this was in a time when the global economy was red hot. China's economy was not maybe doing red hot, but it was improving. So a lot has changed, but then you enter, 2024, as we continue to put COVID imbalances behind us, the Fed continued to tighten interest rates, and that drove global demand down. And we've kind of seen, if you look here, we've seen a bit of a struggle in 2024 for the price of oil. And again, we're testing the lowest price that we've seen in quite some time. So if you look here, the overall trajectory really since April has been that oil prices have continued to decline. So OPEC is hoping that this policy will eventually work, Matt. But that's really the biggest question is, OPEC obviously now extending the production cut. They're really hoping, I mean, that the price of oil has been on life support, and they're hoping to eventually get an economic situation where demand picks up enough that it will push prices higher. But what's going to happen, Matt, is non-OPEC oil producers, US, Canada, other oil producing countries, are simply going to fill the void probably. OPEC is going to lose more market share, and other countries are simply going to keep raising output. So to answer
Yeah,
your question, this may be a losing strategy for OPEC, and that's why there's been a lot of disagreement within OPEC how long to keep this kind of broken strategy.
isn't it kind of like almost a for lack of a better term, a double whammy, because they're getting less per barrel for the barrels that they are selling.
Yeah.
And in an attempt to manipulate prices upward, they're decreasing the
Yeah.
quantity of barrels that they are selling out to the market. So, I mean, look, for decades now, we have all here in America said, oh, the oil rich countries, the oil rich countries, the oil rich countries, it's all in the Middle East. We've transferred our wealth, et cetera, et cetera, et cetera. But these countries also have undergone a lot of transition. Saudi Arabia, for example, in a very large construction project and other domestic things that they are basically sewing into their national economy.
Right.
They kind of need the money at this point in time to keep financing all of this stuff. Am I way off on that
No,
thought?
yeah. I mean, we've talked about, the Saudis' ambitions. They've been purchasing things for their sovereign investment fund. And they have to pay for the spending that they've been doing. And so, that's where some within OPEC are having disagreements because, to your point, back in 2023, Saudi Arabia was producing more at about the same price. So right now, right, they're feeling the pressure after about a year of policy that really hasn't held up the way they were hoping. A lot of these countries are producing less at the same price that they were getting 2 years ago. And so, there's a lot of pressure there. I'm going to share another graphic with you that kind of shows the problems that they've been facing is that global demand, here we are in 2024, supply is still exceeding demand. And that's why oil prices have struggled. And by the way, next year, we're still talking about a potential glut of crude oil from other oil producers aside from OPEC. So in the future, Matt, I don't know if sticking by this policy is going to do them any favors. And it could, again, basically, it could cause them to continue to lose and hemorrhage market share to other producers like Canada, the US, Guinea.
So
Yeah.
what other options do they have then at this point? Could you foresee a
Praying for a
situation?
miracle.
Well, or do you foresee a situation where in an attempt to continue to manipulate the market, they opened the faucet wide open in order to try to hurt other oil producing countries, America and
Yeah.
beyond, that rely on a certain per barrel price, financially crunch them, and then uh, uh, flip that around and say, okay, now we're gonna turn the faucet back a little bit and throttle it back a little bit, and I mean, are there other options for them other than saying, hey, no, we're gonna stick to our guns for the next couple of years. We're gonna keep the output where it is. I mean, are there other options for them?
Well, let's pull up another graphic here and let's see what happened. They tried that tactic, Matt, of flooding the market back in 2014 when oil prices were really high for 2011, 12, 13, and 14. You'll see here most of the time it was between about $70 and about $100, and gas prices were high in 2011 through 2014. And then right around Thanksgiving at their annual meeting, they decided to flood the market. And look what happened to oil prices. They crashed in 2014. That continued through 2015 and 2016. And Matt, by 2016, oil prices were only $30 a barrel. And while a lot of folks would like to thank the Trump administration for that, a lot of it was simply born out of OPEC's decision to flood the market. It was a strategy meant to derail the U.S. oil sector, because at the time OPEC was, what are we going to do? The U.S. is going to produce more and more. How can we disincentivize? How can we derail that? One of the things they did was flood the market with oil in hopes that oil would go down so low that U.S. oil producers would walk away. Now, that did happen to some level, but the U.S., I mean, once the cat's out of the bag, right, with the U.S. oil production going up, you can't really put it back. And so
Right.
that failed policy, OPEC decided to reverse back in, I believe, 2016. And that's why when Trump was president, you saw gas prices essentially the start of his 4-year term were at their lows. Not that Trump changed anything, but oil prices progressively went up through his 4 years up until COVID. Obviously, COVID was kind of a game changer, but oil prices rose in 2017, 2018, 2019, and then only during the pandemic did they really crater down to abnormally low levels. So
Well,
all of that was
by
because of
abnormally
this.
low, you're talking below zero, correct?
I mean, those were the days, Matt, when here in Chicago, I could get on the highway and be downtown in 5 minutes. Normally, that takes 35 to 40 minutes. So we're talking about a massive shift, absolutely, because Americans weren't driving. Nobody was. I mean, gasoline demand fell to 5 and 6 million barrels a day when normally it's 9 million. So that's a little bit of a jolt, we'll say.
Well, and the fact that it was even still 5 to 6 million is quite impressive, considering I do recall, and won't necessarily go down that memory lane too much, but I was a member of the media at that time, and we actually were given uh,
Essential
cards,
workers.
essential worker cards that allowed us to go beyond state boundaries, et cetera, et cetera. Should we needed to have that, they were issued by the Department of whatever. And yeah, I mean, I recall billboard lights even being turned off
Yeah.
on billboards because there was no traffic.
Yep.
And so, I mean, it was just like, wow, this is unheard of for our lifetimes. But yes, I mean, I'm still impressed that it was as high as it was on the demand, because the roads were ghost towns everywhere.
Yeah, I mean, obviously that's why Trump had the tailwind of having really low energy prices in 2020. It wasn't anything Trump did. It wasn't all of a sudden oil coming online. It was the fact that there was a massive change, a change that we've never seen before in overall oil demand. So, looking at this graphic, by the way, Matt, this gives a really good timeline for what we've seen over the last couple of years when it comes to OPEC policy. A lot of this again started in 2023, and if you follow the graphic there, OPEC has basically kind of fully kicked the can down the road, and it hasn't really, their action hasn't really inspired much of a change. So, to see them, they're still trying to stick with it. But the question is, when is their strategy going to change, and when are some of their members, Matt, going to get sick of holding back production?
That's
And
the
I,
key.
I think there could eventually be a correction in oil prices, um, because, like we
By
said, Saudi's
correction,
bills aren't going to disappear. So they're going to have to take action to really do
Yeah.
some damage to the market potentially to right the market.
Now, by correction, you are talking prices going up or down from where they are right now.
Well, eventually, Matt, there'd be a lot of pain. They could temporarily plunge if OPEC gives in and says, "All right, our strategy is clearly not working to drive oil up. We're going to produce at normal levels." Well, here comes a glut then potentially, and that's going to push prices lower. How low and how long prices remain, that could feed the next cycle. So, I mean, oil is simply a balance of supply and demand, and to induce higher prices, first of all, you're going to have to induce lower prices, which will shut down production. It will boost demand, right? People drive more when prices are lower. Oil producers produce less, people consume more. So if you push prices down, people will start consuming more. Um, Eventually, oil inventories globally will go down low enough, and then you're going to basically induce your next upward cycle where rising demand or higher demand and lower supply then will cause prices eventually to go back up. So the question is,
Hmm.
when is OPEC going to throw in the towel and just say, hey, we're going to just go back to normal production and whatever happens, happens.
And will they do it collectively or will they do it nation by nation as a member of OPEC is the other key and question mark that I have as well. And then, of course, there's the concept of buy in the low point. So do I need to have the tanker truck pull in? You're going to have to let me know in a future episode as to when I have the tanker pull into the backyard so I can ride
Yeah.
out the high point.
Well,
You know?
and Matt, while we've talked about the supply side of things here, all of we've talked about is OPEC and their impact too, but we haven't really talked about the other side of the scale, right? These two scales meet in the middle. The other side of the scale being demand, and demand is weaker
Mhm.
right now. When northern hemisphere winter, because the two largest the two largest oil consuming countries are in the northern hemisphere, the United States and China. When we're in winter and the two largest economies use less petroleum, that can have an impact. But we haven't talked about the economic slowdown. Not so much here, but China. China's seen a tremendous slowdown. The property situation in China is one of the biggest reasons I think consumers are lacking confidence in China because of the implosion of the real estate market in China. And so when people
A
are
lot
not
of people are
feeling
not
good,
aware of that, though. So, I
yeah,
mean,
and
can
and
you
so
talk?
that's interesting is a lot of Americans probably are not aware of the, like you said, the China property situation.
Yeah, that's a definite key to remember. If you recall back in 2008, 2009, here in America, real estate values plunged across a good portion of the nation. Um, there there's a similar version of that potentially in China, and that's the only comparison that I know of that I can think of that might sound familiar to those of you watching and listening right now. Which is, it'll be different. It's not identical,
I think
obviously.
it's actually even worse in China right now than ours
That's
was.
Yeah, that's kind of what I was actually just you. I took a breath to say that exact thing. It doesn't look so good. Plus, the population difference between America and China is enormously different as well. So,
Right.
this is a big deal. In something like that happening, we have different aspects on uh, boy, this is complex, and here's why. Because you also have the threat of tariffs with an incoming administration against China and against other nations as well from America. That could also impact the price of oil as well. Am I wrong? And does that impact? Are those threats so far extending to OPEC and OPEC plus countries? And I think the answer is kind of yeah, it sort of
I
is.
mean, I mean, the answer is the potential impact is across everything, right? I mean, especially when we spoke last time, Turkey and tariffs about President-elect Trump's tariff potential. I mean, Matt, the economy is all tied together. You can't, have such a huge impact. You can't tariff something and not expect it to impact the broader economy because everything is going to be tariffed, everything is going to be impacted. Our economy is going to be impacted, and then other countries are going to be impacted. You remember the last property crisis, the
Mhm.
last global recession was brought on by our property crisis, our Wall Street collapse induced basically a global slowdown back in 2008, 2009, the Great Recession. And because our economy is so tied into other economies, when our economy melts down, it's going to have a repercussion.
Yeah.
So yeah, and when you talk about some of the potential business moves that President Trump may take, I mean, the status quo is really important to businesses because the status quo,
It's
doesn't
stability.
change much. It's slow to move. And
Yeah.
when President Trump basically threatens the status quo, businesses suddenly their playbook is out the window because they don't know what's going to happen in 3 weeks' time. So that causes uncertainty and anxiety in the United States, which can have deep psychological impacts to the market. And so, yeah, I mean, there's a lot of unknowns that could happen, and maybe some of them won't happen, Matt. But again, you're seeing a big disruption in the status quo, and that could induce more problems that are hard to see this far out. But again, going back to the China situation, Matt, is that a lot of Chinese bought properties, real estate in the last 5 or 10 years, and that real estate market collapsed, like absolutely collapsed. And China's been talking about rescuing it, but they haven't done much. So, if you want to research what we're talking about and why it's had such an impact on oil prices today, why China's consuming a lot less, because that's a big piece of the pie, a lot of it, the answer is basically China and the property crisis situation there. And this is not the only, if you were to look at news, which we're looking at now, Goldman Sachs, has China's property market reached the bottom? Here's another one from Grizzle. Has China's property market bottomed? China's real estate challenge. China had nearly 100 fewer billionaires. I mean, and now 2 weeks ago, Beijing, Shanghai announcing tax break to boost ailing property markets. I mean, Matt, what's the biggest thing that you may own in life? It's a house.
It's a house.
So when that market collapses, Matt, so does consumer sentiment and everything else. People don't want to go somewhere if you've lost hundreds of thousands or tens of thousands on a property. Do you think
Yeah.
really people are feeling chipper about spending?
Yeah, that was a very similar situation to 2008, 2009 here in America. The same scenario. Take, for example, a nice gated neighborhood that I lived there in Tampa. You actually were at that townhouse. It went from a value of XYZ down to like 80,000, and now in 2024, I believe that same townhouse is worth 300 and something $1,000. I mean, just really when you stop and think about the value and the and the changes that take place over time. But when it actually collapsed, I spoke with the construction company that built that. More than double the amount of physical concrete 2x4s, physical materials, the cost of physical materials more than double what it was actually valued to purchase.
And you see that headline on the screen, right?
Yeah. Expected to stabilize in 2025, but stay subdued. Okay, so here's the thing. Well, that's similar to what happened here. In America, it started to stabilize after a couple of years.
Well, I mean, even a couple of years, things started to roar back. Maybe not property so much, but the stock market did, because I think, again, I think our situation was not as bad as what happened in China. Yes, some people in the U.S. lost their homes; they were underwater, right? And a lot of that brought on new regulation in the banking sector because people were buying houses they couldn't afford, right? They were paying interest only loans. You're literally not owning the house. You're just paying for the interest on it. That's not a smart thing.
You're basically renting without renting.
Exactly. So all of this adds up, Matt, because China is a big piece of the demand side of things. And if things continue to struggle in China, then global oil demand may continue to struggle. And then gasoline prices, diesel prices may continue to struggle too. So, I mean, it's a balancing act. OPEC is probably watching countries like China and saying, well, we're going to hold back because China's economy hasn't bounced back. So that's a big piece of the balancing act of oil producing countries. And they have to, what OPEC really needs is a stronger global economy. But why that's not happening now is because of oil prices hitting triple digits in 2022, right? That brought on a searing economy. They just had a searing economy. So now they're going to have to wait a year or two for economic conditions to improve. And then very slowly they start raising production when they see those signs.
Oh, the tangled webs that are woven.
That's economics, baby.
Right. So it and nothing happens, even though sometimes it seems like it may happen overnight. For those who keep their finger to the pulse, usually things like this are not too much of a surprise for them. In fact, it's something that they may be focused on many, many weeks and months prior to the general population having a clue, because we're also distracted. We have so many other things that we worry about. All we care about is, the local price at the pump, so to speak. And when it starts going up, well, then we start trying to figure out why. And that's where somebody like a petroleum analyst like yourself comes right on in, and you're going, okay, well, here's what's going on. Here's what's been going on. Here's how it's happening. And here's kind of how things sort of look like they're going to shake out over the coming weeks and months ahead. And that's very invaluable information, no question about it. So from an OPEC plus standard, there are quite a few countries in that OPEC plus community that really don't like us very much. I think that's a fair assessment. They would
Well,
like
I mean,
nothing-
and even the relationships, even those relationships, Matt, might be changing in the next couple of years. I mean, obviously, some of the oil producing countries in the Middle East may have had favorites. So, the relationship dynamic may change. And that could bring with it, different things.
Yeah, for sure.
So that's something that we'll definitely be keeping an eye on as we get to January and February, and we start to see, when the Trump administration, when they all take their oath of office, things are probably going to happen pretty quickly, and we'll find out about at least those tariffs. We'll find out how they are met by their peers overseas and other countries and all of that. So it's going to be really interesting, and there's probably not going to be any shortage of things to talk about.
Definitely, for sure. Well, let's talk just a brief moment about some gas prices here. Give us the very latest on everything that's taking place and where we've been, where we are now, and where are we going.
Well, Matt, a quick summary here is basically gas prices have continued to decline now, 7 straight weeks as we get into closer to Christmas. The national average briefly on Tuesday fell below $3 a gallon. It only was there for about 15 minutes. And actually, it was the same day that we did see gas prices cycling in some areas. So the national average went back above $3 a gallon. But all in all, Matt, I mean, all the metrics here are looking terrific. Prices are down from yesterday, a week ago, a month ago, a year ago. And again, we're highlighting prices at about $3.01 a gallon. We have tracked about 32 states here with gas prices below $3 a gallon. There's a lot of states on that list, Matt. And if you look, there's only 15 states now that are above $3 a gallon, which is really impressive, and only 2 above $4. So
only 2 above $4, and yeah, that's Hawaii.
I mean, those areas are coming down as well, Matt. And to tantalize some folks, look at some of these lowest metro area averages. This feels normal.
Yeah.
I mean, look at that. Lubbock, Texas. I mean, we're seeing some stations, Matt, 220s, 230s now. So there's a lot of good news when it comes to gas price. And I'm sure a lot of us are saying it's about time. And by the way, this is 100% seasonal. For those that don't remember when we talked about this last year, I'm going to quickly pull up an article from last year so that folks know that this was expected. Gas prices will fall in 2024. Look at this, Matt. Look at this. Almost a full year ago, 2023. Gas Buddy predicts, and I want to go into a highlight here so that people can see that this is expected. The national average is expected to top out at $3.67 a gallon in May, says the article, and drop down to $2.99 by December 2024. And by the way, this is pretty darn close, Matt, to $2.99. So this was expected. It has nothing. I would love to think I could have predicted the election outcome. I would have not been able to have any guess. But what we're seeing here is exactly what the trends were pointing to a year ago. Yeah. Hopefully we'll be as accurate this year. By the way, we are starting work on our 2025 fuel outlook, which we'll talk about here in the coming weeks.
So we still have plenty of December left. That $2.99 thing as a national average, I'm going to toot the horn for you, so to speak. That looks like a very potential possibility.
Oh, it's coming, Matt. It's only a matter of time. I'll tell you, everything in the pipeline, so to speak, is aligning. And I think maybe by the 10th of December, so maybe here in the next couple of days, once we go below it, I'm hopeful that, we should we should spend 3 weeks below that level, maybe 4 weeks. It all really depends on the weather. Are we going to get a big cold system that's going to cause refinery issues? Usually the last couple of years we've stopped short. Last year we stopped at 307. That was the lowest. And back in 2022, we got down to 305. Both of those low prices, Matt, happened with a week to go in the year. So that's typically where we bottom out, is close to Christmas. If we're lucky this year, maybe it'll go a little longer.
Well, and so far, knock on wood, we've had a fairly mild fall. And of course, we're moving.
I don't know about you, but it's freezing here in Chicago.
It is most definitely freezing here now.
Yes.
But my Boston ferns on the back patio lived a month longer than normal. And they, within the past 7 days, now no longer look green. They look pitiful and sad and like they've been tortured, and it's awful.
You left them outside. You tortured those Boston ferns.
What am I supposed to do with massive Boston ferns? I mean, they're quite large in nature, so I'll buy more in the spring and let them grow all summer, and that's just the nature of things. Plus, they shed so bad in the winter. I've got palm trees indoors that I enjoy a lot better. Thank you very much.
You have like a pool indoors along with your palm trees, because that would be you just have a Mai Tai on Friday afternoons.
Something like that. I mean, I've even got a palm tree in the guest room. Come on down, Patrick. We'll actually do an episode together. I'm telling you.
That's an open invitation for anyone listening and watching now. We'll host a live episode, scary with refreshed Boston ferns, hopefully.
There you go. Well, listen, thank you so much for everything. We, of course, will be monitoring OPEC Plus, and all the other crazy things that seem to happen sometimes that really kind of get us all
riled up,
moving in closer to the microphone, moving in closer to the camera. That's how could they do this?
We get that nerve that pokes out. And by the way, for those that haven't already, like, follow, subscribe. We'd really appreciate it. Comment on YouTube, or if you're not on YouTube, hit the like, follow button wherever you listen to podcasts or videos. But yeah, Matt.
Absolutely. All right. Well, that's going to wrap up this edition of Over a Barrel. For Patrick and myself, thanks so much for joining us, and we will talk again coming up very soon. Have a good one.